So, yo, what is up for everyone watching this on the YouTube replay? I hope you're having a great weekend. Check this out. Let me give you a quick portfolio update. Then we'll get into some stocks that I think are at a pretty good valuation right now. I bought some new companies like PODD. Sprouts Farmers Market looks decent. It's probably going to go a little lower though. But I also wanted to give a quick little glance and talk about, if you're watching this on the very beginning of the stream, thank you. I appreciate that. I might talk about this one more time later, but this is Wix right here. It's one of the only it's the only publicly traded vibe coding play. And what that means is it's called low code slash no code. You can create actual useful websites and apps just with you know, just by generating it with AI. Pretty cool. Hey, what up, Ant? What's up, dude? So yeah, they're profitable. I'll talk about them a little later. So they're pretty cool. But yeah, here's my other portfolio. This is my dividend only account. So every stock in here pays a dividend. A lot of these are like dividend growth companies though. Like you've heard of Meta, Google, McDonald's too. McDonald's is now our largest holding in here. They pay me a lot of good dividends because they have like a 2.2% dividend yield, which is pretty cool. Oh yeah, and here's our portfolio year to date. We're up 13% year to date, 12% the past year, and then our Roth IRA is up 12% the past year and 12% year to date. Yeah, this is like our growthy account right here. I have some growthy names and some higher dividend plays in here, like Main Street Capital, Iron Mountain, and then we have my buy and never sell account. So once I buy a stock in this portfolio, I legit try and never sell it, just try and buy and hold it for the long run. And let me show you how we're doing year to date. This is crazy. This is our best performing portfolio. Look at April real quick. Like we did just as bad as the market. Like look, just in April, we were down 16%. This is April 5th. And now we're up this, as long as you didn't like sell. If you didn't panic sell in April, you're still doing amazing. But if you bought the dip in April, you're doing phenomenal. So that's how we're up 56% in there year to date. And all time, we're up 130% versus the S&P 500 up 58%. Here's what you do. You know, for years, it hasn't been that long, 2023, but this portfolio was just like $160. And then it chilled at, what was this, like 6,000 for a while. All those blue numbers, all those blue things are my deposits. And my account just slowly gained. So yeah. Hey, what up, Ant? What up, Dylan? Where do you check Moomoo? How much cash on hand and how much debt do they have? So yeah, here's what you do. Let's just look at Callmain, for example. This is a chicken egg company. If you're wondering how much cash and how much debt does a company have, here's what you do. Check this out right here. You just go to the balance sheet because this is where all those metrics would be. So you just click on balance sheet right here. And then this top metric right here, the third metric, it's called cash and cash equivalents. They have $1.39 billion of cash. So $1.39 billion of cash, and you scroll down here, you can look at their total liabilities, or you can click on the current debt and total long-term debt. This is the nasty stuff right here that you don't want, the long-term debt. And this company, it says it's blank right here. Why is it blank? Because they literally have no debt. This is a completely debt-free company. So that's what's kind of cool about CALM. And they're one of the higher yielding plays. They just sell a commodity, of course, but they have a 6.85% dividend. They have a 20%, the largest market share for chicken eggs in the US. And if you guys haven't seen, chicken egg prices are pretty ridiculous, but they're printing money. You know, the bird flu, chicken shortage is really benefiting them. So they're making abnormally high net income. I do expect this to trend down. But here's the real quick little recap about this stock. Look at this market cap in the top right, and this is why I own them. But they're a $4.7 billion company. So remember, the whole entire company is worth $4.7 billion. They have no debt at all, literally debt free, and $1.39 billion of cash. That's insane. So 25% of the entire market cap is just their cash on hand. That's a huge safety net, gives them tremendous freedom, no debt on the books, and it's a company making a couple $100 million in net income a quarter. So yeah, pretty cool. Yeah, conventional shell eggs and specialty eggs. So pretty cool. And they change their dividend every quarter. Hey, what up, Bryson? Good to see you. Why don't you have any quantum computing names? I do have quantum, but it's not a pure play quantum stock. I have Google actually. So that's my one quantum play. Google literally has the money in they already are the industry leader. They have the money and the talent to be the industry leader, to continue to be the industry leader. It's not a pure play, obviously, because they own like YouTube, Android, but yeah. So that's my way. Hey, what up, Looney? Good to see you, my friend. Hope you're having a great day. He said PFF. Yeah, happy Saturday, everyone. So this is the preferred iShares preferred and income securities ETF. So I'm assuming this one's going to have a high yield. Let's see, a 6.4% dividend. So that's a pretty nice yield. But notice these don't really, or this one hasn't really outperformed. Like it's lower than it. Wait, what year? 2000. This is since 2007. So that's actually, this is, we really got to zoom in here. So here was the 2019 crash. There was COVID. It crashed, and now it's kind of back at the same price. I don't see this one outperforming. It just looks like a high dividend play. Yeah. Oh, it owns a bunch of bonds. It looks like Boeing debt. And all right, cool. What's your opinion on BME, the European retailer? BME. Let me know what ticker symbol that is. I can't find that one. Is Coca-Cola a good buy? Yo, Magic. I don't know which one you're talking about because I actually own the bottling company, COK. Look at this stock price. This isn't normal Coca-Cola. This is the bottling company for them. They bought the basically affiliate rights to Coca-Cola for $1. Coca-Cola is the largest shareholder. The main share for Coca-Cola is ticker symbol KO. And this is that one has a super low dividend, but this is the main stock with the 3% plus dividend. I do like Coca-Cola as kind of like a nice, consistent dividend play. And you know who else kind of approves my message there? If we go over here to the portfolio insights, our homie Warren Buffett owns Coca-Cola. We can see his exact portfolio, and 8.66% of his portfolio is in Coca-Cola. So that's kind of cool. Someone said Palantir. What up, Barnix? He said Palantir. Let's do it. So this is a company I would love to own. Do you like NVIDIA right now? I do like NVIDIA right now, but it's something you want to nibble on at this valuation. You don't want to full size that position yet. It's too expensive. But here, this is Palantir. I'll actually look at NVIDIA in a little bit after this. And with Duolingo and hey, what up, Luffy? Remind me to look at that one. So here's Palantir. They're at an all-time high. Here's I'd love to own this company. Hopefully I will one day. If I can actually find a valuation I can reasonably pay. But check this out. They're trading at 122 times revenue. So not 122 times net income, but 122 times revenue. Revenue is a bit hard to pay. But here's why they might deserve it. What's the app? Yeah, hey, this app, it's a brokerage. If you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. But look at this. Half the revenue comes from the government, and this business is booming. Lots of police stations use Palantir software, and this is up 49% year over year after growing 23, after going 15. Like there's no red numbers. It just hits a new record every year, every quarter. So the government revenue is growing like crazy, and also the commercial side with other S&P 500 companies. It's up 46 after growing 32. So both businesses are booming, and not just the revenue, but profits as well. They did $1 billion of revenue, and out of that billion, 330 million of it was net income. So they have a 33% net margin now, and they have an absolute monster of a balance sheet. Palantir has no debt at all. And let's see how much cash exactly. $6 billion in cash. So pretty cool. Palantir is a beast, but too high of a valuation. Be careful with that one. So yeah, NVIDIA stock, let's pull up this one. Then we'll look at Duolingo. I love Duolingo as a subscription model play. They're huge. What app? Yeah, hey, R, again, if you want to get this app I'm on, it's where you buy stocks on. It's a brokerage. It's in the link tree in my bio, the very first link there. So here's NVIDIA right here. I'm going to buy this stock eventually. I own AMD right now. Here, I'll show you that real quick if you want. Or I'll come back to that. But anyway, here's NVIDIA. Let me show you why I love this company. And I'm kind of pointing out the obvious. But obviously, they have a huge GPU market share. They have a 20% PC GPU market share. And they have some other small businesses. Like, did you know they have an automotive business like Lucid? If you didn't know, Lucid has these autonomy driving cars that literally uses NVIDIA's autonomous software, which is cool. Kind of like a Tesla competitor or something. Very small portion of their business because this is mainly a data center play. Basically 80-90% of the revenue comes from the data center. And check this out. The revenue, the sales are up 55%. They did $46 billion in revenue. Out of this $46 billion in revenue, $26 billion of it was after-tax net income. If we go to the net margin, it was a 56%. That is insane in net margin here. So NVIDIA prints money. Basically, the CapEx of the Mag 7 is what's fueling this. They just got a bunch of orders from CoreWeave. They got orders from OpenAI. NVIDIA took $100 billion stake into OpenAI, I believe. They took a $5 billion stake into Intel. And what I'm assuming is NVIDIA is just going to move some of their like older chips, like the GTX 1080 series or something. They're going to move that to Intel in the US, and they keep all their good stuff in Taiwan still. But they're just making the government happy with that news. I do like NVIDIA, especially after that Intel stake in the government news. So let's see here. Duolingo, let's do it. So I love this. This is a language learning app. If you've heard of them before, they're a software name. A lot of people have, the reason the stock is off their all-time high is because they think AI is going to replace this company. Like ChatGPT has made a language learning app competitor. Google has now made one or something. But it hasn't hurt them yet. Like their fundamentals are still super strong. And until that really goes away, until I really see weakness in the growth and the financials, like this is a good stock to buy, in my opinion. Of course, none of this is financial advice, but check out their subscription model. That's most of the revenue. I love this. It's so predictable and it grows immensely. Like I can't believe but it's true. It grows 40 to 50% every year, every quarter for eternity. Like it's insane the growth here. If we look at it on an annual basis, like just 50, 47, 50, 50. The growth is insane. And not just, that's most of their revenue, but they also have, if you don't pay for their subscription, you see a bunch of ads and their advertising revenue is up 55%. Like I love the growth rates of this. Like even though it's a small portion of their business, I love that it's growing very fastly. It's up 55%. So pretty cool. And they're not just growing revenue, but they're growing profits. So revenue's up 41, but net income after-tax net income is up by 83. So that means they're expanding margins. The highest record margin they've never had above a 17% net margin before. The free cash flow is up 60% year over year. Everything here financially is headed in the right direction, in my opinion. I got some turmeric ginger tea. Okay, so SPHD. This must be an ETF right here. Power shares. What is this right here? S&P 500 high dividend, low volatility ETF. It doesn't want to load, man. There we go. Oh, well, there it goes. Okay. SPHD. Let's see here. This one's actually above its 2019 price, so that's decent. Hasn't done too well though. What's the yield? You get a 3.6% dividend yield, and oh yeah, it owns some REITs in here. It owns a lot of REITs. Yeah, that's interesting. I wonder what's the expense ratio real quick. Expense ratio 0.3. That's the same as Jeppy. Maybe check out Jeppy or JepQ. What up, John? Good to see you, my friend. A gent said ALS in stock. What's this one? So this is Allison Transmission. So the company hasn't been doing too well ever since earnings. Let's go look at their earnings and see what happened there. Maybe we can figure out what happened in their numbers. And it looks like they traded a very low multiple. Is that normal for the industry? So no, they're trading at 9 times net income. The industry average is 22. Let's see, did they miss on expectations? So they just beat on revenue, they beat on net income, and they beat on EBITDA. But I do notice like a sudden drop off the next 2 quarters. So maybe they gave back here like bad guidance. Like, yeah, the net income is supposed to fall a not so great chunk. Okay, so yeah, the revenue actually lost its growth. The revenue is negative year over year. The sales, the lifeblood, it's down 0.2, but the net income is up 4. So they were able to grow their margins, hold up their margins, slightly grow them year over year. Nice 25% net margin. Still, they're making good money, $200 million in net income a quarter. But I think one of the reasons the stock is well off its peak is because it looks like the growth is kind of gone away on the revenue. We want to see the growth come back, and it doesn't look like analysts are expecting that growth to come back with the next 2 quarters. So just watch out for the next couple of quarters. All right, let's see here. Let's see. Glad you're streaming. Hey, thanks, John. All right, name said, I think BMRRY stock. Okay, we could find it. Pretty cool. Okay, I'm glad I could find it for you because that was a weird ticker symbol. Looks like they're at a close to all-time low, unfortunately. Let's go see if we can figure out what happened here. I think you said they were a grocery store. Yeah, we're going to convert their currency from British pound to USD just to get a better idea. France B&M. Is that a grocery store? Let me double check. I don't know. It's a non-grocery products. Okay, let's see what the revenue is, though. So revenue was for the full year, fiscal year 2025. Man, I'm sorry. A little sick right now. Life said, best grocery store I've ever been to is Sprouts Farmers Market. Hey, I do own that company. But let's see, the net income. The net income is still good. They probably have, low 5-6% margins. That's all right, though. I'd just be careful with this name right here. I'd probably rather own a Sprouts Farmers Market, and I do, and I'm down on them. Check this out right here. This is another grocery store. They're like a healthy grocery store, and they have abnormally high margins for the industry. Low key, this one could probably go under 100. I hope it doesn't for the sake of my share. So if you do, don't catch a falling knife is what they say. And if you do want to buy this one, just nibble on it. Don't make it a nibble. Make just one share something. Here's what's so cool about Sprouts Farmers Market too. They have really high margins and expanding margins. 6, 8, 4. Costco always has a 3% net margin. Kroger is lucky to have a 2% net margin every quarter. And they have double, triple that. So pretty cool. And Sprouts Farmers Market financials are pretty good in my opinion. Hey, what up, Luke? Not Fates. What up, my friend? Hope y'all are having a great Sunday or Saturday. Okay. Hey, Nathan, beware of Weeble, hard time customer service, sold their stock. Oh, hey, what up, German? Yo, I got Weeble too. I got multiple brokerages. Yeah, I like Moomoo right here a lot. Robinhood's good too. Yo, Nathan, I've been messing with you on TikTok regarding doing a stream. Is it really you? No, hey, Alex, that's not me. I've never DM'd anyone on this account. Well, I like one time, but no, I'll never watch out for people impersonating me. I'll never follow you, DM you. This is my only account, Nathan_Robert. There's literally other accounts. Like if you follow me, you'll get followed by someone impersonating me. That's not me. And they have a fake, like a different link in the link tree in their bio. It's like not a link tree. It's some weird thing. So watch out for that. This is my only account. This is the official page, Nathan_Robert. Yeah. Maybe I could pull up my TikTok account. I don't want to get in trouble though. Okay, let's keep going here. What do you think of the market for Monday? I don't know. Looks like a little bit of war escalation. So I don't know how that'll do. So how about SPUS? What is this stock right here? Title ETF, S&P 500, Sahara. Okay, let's see what it holds. So its largest holding is NVIDIA, Apple, Microsoft, Broadcom, Google, Tesla, Eli Lilly, Exxon, Oracle. Yeah, these are all great holdings. Like I approve of all these holdings. It looks like a good ETF. And I can see why they're at all-time highs. Nice. All right. ASM. Hey, try not to spam there. Yeah, I'll try to get to all the stocks here. I do apologize. So this is Avino Silver and Gold Mines. Yeah. Anything gold related is most likely at an all-time high right now because the actual price of gold is at an all-time high. There's silver, copper. Fun fact, did y'all know this? The company Google, like Google, the stock, their market cap is worth more than all the silver and all the copper in the entire world combined. Isn't that great? Like Google is literally worth more than all the silver and all the copper in the whole entire world combined. Gold, not though. Gold is the most valuable asset. They're worth 24 trillion. You know, the market cap of NVIDIA is 4 trillion. The one for gold is 24 trillion. And if we just look at the actual price of gold, ticker symbol IAU, this is what the stock is following really, the actual underlying price of gold. And check that out. It's at an all-time high. So if you got any gold chains or gold jewelry or something and you don't really care about it, you're not using it as an investment, maybe go sell it. If you buy none of this financial advice, of course. What's this at? Oh, yeah. Hey, by the way, I'm on a brokerage right here where you buy stocks. If you want to get this app I'm on, it's in the link tree in my bio. Very first link there. Hey, Pablo said, best thing you can do is sell your stocks. I don't know about all that. S&P 500, CAGR's at 8% plus a year. A little more the past couple of years. But yeah, I'm a big fan of just buying and holding. I'm a big fan of diamond handing. That's kind of what I do. This account specifically I made to diamond hand. If you look in the top left, it's called my buy and never sell portfolio because once I buy a stock in here, I literally never sell it. There's very few, like 2 stocks sold in there. But yeah, and then I have my risk on portfolio where I have a lot of risky stuff where I do sell stuff. I do trade in and out of here. All time, we're only up 14% on this account. But yeah, I regret selling a lot of shares like Robinhood. Man, I still kick myself for selling most of my position a long time ago. But yeah, anyway, let's keep going here. MicroStrategy. Hey, Fava, dude, thanks again for that rose. I forgot to say thank you for that. PSTV for sure. So this is Plus Therapeutics. Now, I'm probably not going to have anything good to say about this stock financially. So if we look in the top right, this is a $61 million company. So let's go look at their financials together. So remember, this is the whole entire company's worth $69 million, and they're a revenue-less company. Or 2025 Q2, the revenue was $1.39 million. So they're doing $1 million of revenue a quarter. What about the net income? That was a one-time adjustment. Yeah, they're losing 3. At least the losses are narrowing a little bit. How'd that just happen? Oh, so actually, they've been able to issue shares. That's really interesting. They do have a bit of debt. I'd just be super careful. I mean, $60 million company, so risky. Nothing really blowing me away there, to be honest with you. I wouldn't put. I probably wouldn't touch that one. Um, I'm interested in your open door stock. Okay. Oh wait. Oh, hey. What up, Alex? Gold is a hedge against inflation. Yeah, exactly. Gold is like you buy it as a diversification asset. You don't buy gold to outperform the S&P 500 because it won't in the long run. But you buy it for that war fear, that inflation fear, the end of the world fear, whatever. So here's Open Door. This is kind of a momentum stock right now. There, what does this company do? They just flip houses. And did they just report earnings? I don't think so. But I want to show you what happened. This is why the stock is momentuming so much, because we just got an interest rate cut. Jerome Powell just cut interest rates. And if we go back to what happened the last time we were in a low interest rate environment, which was 2021, 2022, look at the growth they experienced. These were insane growth rates. They were doing 4 to 5 billion in revenue a quarter. But then as the rates hiked up instantly, look what that did to the sales. It plummeted down 70, down 69%. Like sales fell off a cliff, but there's some enthusiasm going into a lower rate environment. This one looks like fundamentally not a good stock, but with right now's environment, it's a good momentum swing trade or something, not something you buy and hold for the long run. And let me go see what the interest rate cut probabilities are. Here's how you do that. You just go to the markets tab, stocks, and it should be toward the bottom here. Oh yeah, you can see a lot of cool stuff like the institutional tracker. You can see what Berkshire Hathaway and all these other institutions are doing. But if we go down here, oh yeah, there we go. 87% chance of an interest rate cut. So on literally the day, October 29th, there's 88% chance there's going to be another 25 basis point cut. We just got one, and now we're about to get another one. So pretty interesting. Yeah. All right. So let's see. Let's look at some more stocks here. What about Walmart? Hey, what up, mister? Let's check it out. I love Walmart. This is a great just buy and never sell stock. This is actually this was in 2008. This was the best performance stock in the S&P, and then McDonald's was right behind it. In a recession, they do good because people still got to buy groceries. What happens is, oh yeah, hey H, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks on. So this is Walmart. They're at an all-time high. I mean, look at that. The chart looks like Nvidia. That's insane. And they have such a great business model. They have some of the most valuable real estate, like impossible to replace logistics hubs that's in like 10-mile radius from every house. Like they have an insane network. And they also own Sam's Club. It's like a Costco competitor. Costco is a great business model. You know, you got to have a subscription to get into the store. And then whether you go to the store or not, you still are paying that monthly fee. And whenever you go to the store to buy stuff, you're buying stuff in bulk. So you feel like you're getting you do get a good deal. And check out the net income this company is making. It's just stable. They're making 4 to 7. That must have been propped up. So basically they're making 5 billion in net income every quarter. You get a near 1% yield, right? Yeah, 0.9% dividend yield, not too shabby. I should have bought Walmart over Sprouts Farmers Market, but I'm actually looking, if you're looking for a smaller grocery store, I'm liking Sprouts Farmers Market right now. They're a bit more healthier grocery store, so they have some more pricing power, higher margins. Looney, he said Progressive. Dude, I love this company, and I think we're down on them as well. This is like another defense play, you know. Where's Progressive? So yeah, we are down 2% on Progressive. That's all right, you know. That's okay. This is one of the stocks like the market's close to. Yeah, hey PKG, if you want to get this app, this is a brokerage. If it's in the link tree in my bio, the very first link there. If you want to get this app, I'm on. So here's Progressive. It's like a interesting alternative to like the market's at all-time highs. You don't feel great buying the S&P 500 all-time highs. Like this is a stock that I think is great. That I'm not just recommending this stock because they're not off all-time highs. Like I'm recommending this one because they have good fundamentals. And I'll just share with you that. Like I'll just show you the numbers for yourself. You can draw your own conclusion. If you're wondering, if you don't know what Progressive is, it's that insurance company. You've probably seen the TV ads like with Flo or whatever her name is. But check out their personal lines. This is the growth monster. Like if you look in the middle here, these are the year-over-year growth rates. It literally hits a new record every year. every quarter. So it checks the box of growth. Let me see. That's their personal lines. Their commercial lines also at a record. That's 13% of the revenue. But the revenue's growing greatly. So revenue's up 21% after growing 18, after going 33. Like, look, there's no negative growth rates. Like, that's the impressive part. As we know, insurance companies print, but revenue's up 21. But look at the net income. The net income went from 1.5 to 3.2 billion. The net income was up 117%. They expanded margins. They now have a record 14.4% net margin. It's never been higher than that before. And what this company does, they pay a dividend. They pay you normally just 10 cents a quarter, but every single January is like right after Christmas, they give you a special dividend. And this year it was $4.50. Last January it was 75 cents. That's a huge ramp up from the normal 10 cents they pay, 10 cents to $4.50. And I think with their insane net income numbers, they're going to pay another special dividend next January. That's going to be a new record. And then when you get that like $5 to $8 dividend, that's like an instant like 3% return. Crazy. Anyway, not financial advice, of course. I'm just on here giving my opinion. By the way, I sell nothing. Watch out for people impersonating me. I'll never follow you, DM you. I have no course book. Okay, so let's keep going here. What do you think of IREN? Yeah, so this is Iris Energy. This is a data center play, and they actually have good financials. Like, they're kind of like a smaller CoreWeave. Pretty much the same thing as CoreWeave, just a little smaller market cap, but they have great growth metrics. Check this out. Like, this is what kind of justifies the huge stock price appreciation. If we look at the revenue is up 220% after it grew 100% from the previous year. Like, they're on a streak. Like, they're growing their revenue like crazy. And not only revenue, but look at the past 3 quarters. They're net income positive. So it's a profitable company growing like crazy in an attractive industry. I definitely think they're a bit, expensive here, but, high growth companies deserve high premiums. CoreWeave is cool too. Hey, what up, Ryan? Nike earnings next week. Oh, hey, that'll be very interesting to watch. I just picked up 100 shares of Rich Tech Robotics Friday. So here's the thing. All right, I've been seeing a few comments about Rich Tech Robotics. I didn't want to cover this one, but I'll be super quick right here. Hey, no way, the homie Mac is in here. Dude, CoreWeave is pretty interesting. We might look at them next. So here's Rich Tech Robotics. Here's the thing I want to warn people about. I've seen a lot of robotics companies out there like Symbiotic, and compared to this company, like this one doesn't have any IP or patents or anything. If you look in the top right, this is a $700 million company, or basically $800 million. So it's an $800 million company. And check this out. Here's kind of the unfortunate part. It's a company doing $1 million of revenue a quarter. Like, in my opinion, from a fundamental point of view, it's like really hard to trust this name. Like, $800 million company, $1 million of sales a quarter, losing net income every quarter, no patents, no IP. They have some like little partnership with NVIDIA that doesn't really make them any money. But out of all the robotics companies out there, I think this one's, if you're just looking for a robotics company, just buy, never sell. I'd rather buy Amazon or SYM, Symbiotic. Symbiotic's a great one. We'll see if it loads here. Do you think Micron has room to grow? I do. We'll check out Micron after this too. But yeah, here's Symbiotic. This is a warehouse robotics company that helps out Walmart at their warehouses. And they grew so much attention that Walmart decided to invest in the company as well, since they're helping them out so much. So Walmart owns 13.5% of all the shares. So when we were looking at Walmart earlier, 13% of all this company's revenue technically goes back to Walmart. And check this out, 25% of the revenue, the revenue's up 25% year over year after growing 50%. So the sales are really growth. If we just looked at Rich Tech Robotics, that one has $1 million in revenue a quarter. Well, this one has a couple $100 million. And they also have over 1,500 registered patents and IP. So pretty cool. And they're losing a bit of money, but it's all right. They're really barely losing any, like 20, 30 million a quarter. And they actually made net income that one quarter. Probably by the same time next year, they'll hopefully be net income positive. So that one's cool. All right. Yeah. Hey, what up, Leston? Good to see you, friend. Hey, thanks for subscribing, CYM. I appreciate that. Hi from Italy. Hey, what up, Sky? Hope you're having a great Saturday. Hey, by the way, if y'all wanted the follow button, we stream every day. So Jan said AGR stock. Let me know, are you talking about this Australian company? Hopefully not, because it's worth 40 million and they're at all-time lows. I can't find that ticker, unfortunately. But I did try. Ooh, someone said Honeywell. This is another like pseudo quantum play. They are in quantum. They're in aerospace. I think they might be spinning off their aerospace business, but this one is also a kind of a dividend play. If you go to the dividend, you get an over 2% yield, and the payout ratio is safe. It's a 50% payout ratio. They slowly raise their dividend every year, which is pretty cool. They trade at a safe multiple. Like, that's not so expensive. They're trading at 23 times net income. This is a mainly aerospace company. 41% of all the revenue comes from the aerospace. Then their industrial automation energy. How's the energy business doing? That's up 15% year over year. How about the aerospace? Aerospace is up 10%. These are growing nice double digits here. What about the net income on this company? So yeah, they're making 1.3, 1.6 billion in net income a quarter. These are some pretty solid numbers. Does looks like their margins did fall a little bit, but still, these are good numbers. What do you think of Lucid Motors? Yeah, I don't love Lucid. Fortunately, oh, you know what? Someone said it. Let me see if I can find that one. It's 10 cents. Here it is. So you actually won't believe if you play video games, this company right here owns an insane amount. So this company owns Riot Games. So if you've heard of League of Legends, Valorant, this is a company that owns them. They also own PUBG. Like holy, they own 49% of Epic Games, which owns Fortnite. So they own 49% of Fortnite. They own Supercell. So if you heard of Clash of Clans, Clash Royale, this company also owns that. So they're a beast. They are Chinese, but they own a bunch of stakes in random companies. Like they have a 10% stake in Reddit, 10% stake in Snapchat. Like if this was an American company, they'd be a Mag 7. Like I kid you not, they would kick out Tesla or something. I don't know. And they put Tencent in there because they are a beast. And I'm looking to own them eventually. Kind of just buy them and just never sell them. They're great. They're great. NetEase is kind of another one. They own like Marvel Rivals. Actually, they're giving Disney a lot of royalties. Disney was talking about that. I do own some Disney shares, but Disney was receiving royalties from their Marvel Rivals game that NetEase made. Oh yeah, hey, if you want to get this Appamon, it's in the link tree in my bio, the first link there. This is the one AGRI. AGRI. Hey, China. Yeah. Okay. Let's see. So this stock is at an all-time low, unfortunately. So yeah, we're not going to cover this stock. Yeah, Jan. If you look in the top right, market cap. What is someone Wookie? Yeah, he said, what's the market cap? Yeah. So that means how much the whole entire company's worth. Like technically, you could buy this whole company right here for $8 million. So you can buy this entire company for $8.8 million. That's its market cap. And here's what you're buying. You're buying a company that lost $8 million of net income just this quarter. Like it's hard to trust these names. Like some people will buy the stock saying, oh, it looks really oversold. It's at the bottom. Maybe it'll go up from a technical point of view. But companies with these sort of fundamentals, like you would have been saying that back here, these are the kind of stocks that just continue to climb lower and lower and lower. And they're not worth buying the dip on. Not financial advice, of course, but I hope to see everyone do well. I don't want anyone to lose money. BYD. Hey, let me know, US, are you talking about BYD, the car company, or BYD game? I don't know which one you're talking about. So APPF, is that Appfolio? Yeah, this is actually a pretty cool stock. I've looked at their financials before and they're pretty solid. Why does the sticks look like that? So they rallied up on earnings and then slowly sold it all off. Let's go see what their earnings were. I am very curious. So they beat on revenue. They beat on net income and they slightly missed on EBITDA, but what was their growth? Revenue was up 19% year over year, not too bad. Revenue's up 19 and their net income positive. That's actually great news. So they're making net income every quarter. They have a monster balance sheet, so no net debt. Their cash pile is falling a bit, but yeah, are they investing in the future? So they actually sold some sort of asset. I wonder what that was about. Anyway, I like this one. They might just be a bit overvalued right now. Yeah, 50 PE. I know they're like a software name, but I like that one more than dislike. I put them on the watch list. Who was that special dividend? The special dividend stock? That was Progressive Corp, ticker symbol P. That was a while ago, so I don't know if that's the one you were talking about. But this is really the only stock I've talked about with special dividends. Progressive Corp, PGR. If you notice, they do a special dividend every January. So normally every quarter they just pay you 10 cents. 10 cents a quarter, but this January, they do it every January, they paid you $4.50. That's a huge increase. And the year before, they paid you 75 cents. What I was talking about is with their expanding margins and net income, like I really think they're going to do a new crazy special dividend to attract investors and stuff. So let's keep going here. I'm down 5,000. Do you think I would try and slowly sell out of it, Jan. That sucks, man. Dang. I've been there before. Like I've sold out of companies on here. Like some companies I have deemed too cheap to sell, like UiPath and Zoom, like no moat company Zoom. But I wouldn't buy more ever, but it's just too cheap to sell. But I do have losses that I've sold before. Like I lost over $2,000 on ChargePoint. In some companies, it's okay to take the loss on. Here, I'll actually I just love being fully transparent. I go to so many other streams and no one like shares their portfolio and stuff. If you got any questions for me ever, let me know. But check this out right here. Here's ChargePoint stock. As we can see, the stock is at an all-time low. Here's where I sold it at. And thank goodness I sold it. You ready? It should show the sell order right there. I sold all my shares on this day right here. So I sold all my shares that day, but here's where I bought it. You ready? We got to go way up higher to find my buy orders. I went way too far back. Wait. I don't know what just happened right here. Okay, I was buying this stock, way higher than I should have been and took a huge loss on it. All right. I wanted to get to MU Micron. Someone said, do you think this stock has more room to grow? Honestly, I think it does. They're one of the cheapest like semi plays out there. I think I like this one more than Marvel right now. So yeah. Okay, we'll look at BYD, the EV company. What up, Lil C? We'll look at LHX. Yes, sir. So here's Micron Technology. Here's why I think this one might have more room to grow. If we look at their net income multiple, especially compared to the industry average right here, they're trading at 20 times net income. If we look at Broadcom, Nvidia, AMD, they're trading at pretty ridiculous multiples. But here's a company that is just as growthy, same industry, and they're trading at a lower multiple. Like, look at this. The revenue is up 46% after growing 93%. The growth is insane. So the revenue is growing, and so is the profits. Their net income went from $1 billion to $3.2 billion. Like, they're expanding margin. What was their net margin? Look at that. The same time last year, the margin was 12%. Now it's 29%. Like, insane. Oh, hey, there we go. Hey, TikTok took down the stream. They said, hey, by the way, best way to support me, subscribe to my YouTube channel. They just they took down my live from For You page recommended. That's all right. Hey, best way to support me is subscribe to my YouTube channel. It's called Nathan Robert. I stream daily. So yeah, appreciate everyone being here. Oh yeah, this app I'm on. Yeah, this is it's where you buy stock. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. So what up, B-Mails? He said SMR. This stands for Small Modular Reactor. This is a nuclear play, but hey, we'll look at Amazon. Yeah, we'll look at Amazon and BYD, LHX. We'll get to all these, don't worry. So here's NuScale Power. They're a nuclear play, but here's why I'd still be careful with this name. They basically just got their first contract ever. Like the revenue the same time last year was, 400,000, 900,000. Now it's actually, some good numbers, 34 mil, 20 mil, 9 mil. So let me put in an appeal. Oh, I didn't click appeal. Well, there goes that chance. Well, anyway, this one's not terrible compared to some of the, like, I'd way a million rather times buy this than Oklo. But but I'd also rather buy a Vistra Energy or a Constellation Energy over that name right there, to be honest with you. I do own CEG. This is the main nuclear energy play. In my opinion, they're the purest play. So LHX, what is this stock right here? I have this one on my watch list and they're at an all-time high. So yo, congrats if you own this stock. You got to be up on your position. Let's see what they do. So they're space and airborne systems, integrated mission systems, communication systems. So they're kind of like an aerospace defense. So the revenue is only up 2.4. So revenue's up 2.4, but the net income is up by 25. That's impressive. They were able to grow their margin a good chunk. So yeah, the sales were only up 2%. That net income being up 25 is really impressive. They're doing $500 million in net income a quarter. Do they have a dividend? Hey, you get a 1.6% dividend yield with this one too, and they're at all-time highs. Nice. So we'll get to Amazon too. Let's look at BYD real quick. This is a Chinese company. I think we should be able to find them. So yeah, basically Chinese Tesla. If we didn't have tariffs on their cars, they'd be all over America because they're good and they're cheap. And yeah, 62% of the revenue just comes from China. If we go to their net income right here, this is in USD. They've actually made like 4x the net income Tesla has so far this year. So they report in halves. So it says 2025 H1 and 2.2. Like they're profitable. They're making net income. I do like this one. You get a 1.36% dividend yield as well. What's the market cap? A $970 billion company trading at 21 times net income. That's really interesting. So let's pull up Amazon. Yo, I do own this one. Check this out right here. This is in my buy and never sell portfolio. I got 13 shares of Amazon. I'm thinking about buying more of this stock. Like almost certainly I will be buying more shares of Amazon very soon. At this price. Like even if it stays at this price or goes a little higher, I'm going to buy more shares just because I want to build up my position, build up my quantity of shares. This is a stock you just want to buy and never sell. If you just have the intention to never sell, it's worth buying right now. This is like an ETF in one. E-commerce play, subscription play, cloud play, satellite, drone, robotics, book play, like huge. So look at their AWS business. This is their most valuable business. Their Amazon Web Services is over 100 billion of annual revenue for them. It's insane, and they do crazy revenue. They're a grocery store as well. They're like a UPS, a Walmart, and Instacart all in one. Their revenue is up 13% year over year. The net income is up by 35%. So what that means in English is they're expanding margins. Like everything here financially is headed in the right direction. And they're so innovative because if you go to their cash from investing activities, they're just plowing money into the future. I love this. Yo, YC, thanks for the roses there. Two apps I'm familiar about. What? Yeah, hey, this. I have Webull. Yeah, I have multiple. I have 3 different apps right here. So yeah, I have Webull, I have Robinhood and Moomoo. And out of all of them, like the most useful brokerage in my opinion is this one right here, Moomoo. Like it has a lot of cool features too. Oh yeah, we were just looking at the interest rate cut probability. It's an 87% chance on October 29th. You can get some of the other data here. But yeah, if you want to get this brokerage, it's in the link. It's where you buy stocks on. It's in the link tree in my bio, the first link there. Affiliate link, full disclosure too. If you deposit $100, we'll both get like a fractional, like $20 piece of NVIDIA. So someone said, wait, is BYD a buy? You didn't tell us. It's a better buy than Tesla. Like BYD is doing a bunch of deals. BYD I wouldn't call anyone crazy for having it as a small chunk of their portfolio for sure. When did you invest in Powell Industries and Cover Systems? Because that 200% growth is insane. Yeah, I've been holding these companies for years and I haven't taken a single dime of profit. If you look, and I made a YouTube video the exact days I bought this stock. Like you can go to my channel. I made it this exact day in 2024 January. This is where I bought all my shares of Powell Industries. I just bought all my shares this day right there. And then I've just been holding ever since. I've held through a lot of volatility. I saw this stock go from 360. It was at 350, went all the way down to 140. But now it's back to 290. So I deserve my and then Comfort Systems as well. This one I didn't buy that long ago. I actually bought all my shares this year during the April dip. So yeah, they've just and the secret is I just haven't sold any. I just diamond hand. Mr. Diamond Hand over here. So yeah, this is because this portfolio specifically is called my buy and never sell portfolio. I just try and never sell stocks once I buy it in here, and it worked out for some, but not for others. Like look at this stock right here. I recommend if you find a stock you like and you want to buy it, you should dollar cost average, which means you slowly buy into it. But just because you slowly dollar cost average into it doesn't mean it'll save you, because look how down bad I am on this position. So that being said, I'm not an expert. Always do your own research and be careful if you're going to catch a falling knife on a stock. Like have a reason more than just, the stock is going down, RSI low. Like buy a stock that has a oversold RSI that has good quality fundamentals. Like one stock that, just random for an example, I think it's going to go lower, might even touch $100 a share. But this one I've been buying on the dip a little bit. I got 9 shares right now, Sprouts Farmers. Should I be taking my 20% profit or keep the rest? Yo, what's up, Oscar? I don't know what you're talking about. I don't know what asset that is or anything, but if it's like Google or something, like I wouldn't sell it for 20% profit. Just buy and never sell them. Like Amphenol, like I think this one's, even though they're at a ridiculous valuation, I think they're probably going to go higher. I certainly wouldn't buy them here though. The risk reward doesn't look great. Hey, what up, Jan? He said, INVZ, let's do it. So INVZ, so this is Innoviz Technology. So very small company. I'd be very careful. They're only worth $340 million. But let's see what they do. So they're in LiDAR sensors market. What are the expectations? So they did $9 million in revenue. Analysts are expecting $18 million. So actually the revenue is going to go from 6 to 18 year over year. That'll be very surprising to watch. But yeah, do beware. It's just a small company right now. They are losing net income every quarter, but at least they're narrowing. Yeah, they're losing like 20 mil of net. That's 80 million a year. Oh, that's 20% of the entire market cap. So that's one risk. They've lost 20% of their entire market cap just in the past year of net income. So be careful with certain, like just small company. But those growth expectations by the analyst I did like. But yeah, it looks like a very small LiDAR play. Hey, what up, Celery? Good to see you, friend. Isaiah said CTAS stock. What is that one? Is that Cintas? Okay, so or Cintas? I don't know. This one's done very well, especially since 2019. Let's see how they're doing financially. So uniform rental and facility services. All right. And then they're in first aid and safety services. Well, that one's growing very nicely. It looks like just hits a record every year, continues to grow very nicely. And then they're in all other, which is also at a new record. So cool. Here's the orange lines what the analysts expect. Looks like they're beating on revenue. They beat on net income. They beat on EBITDA. They're making net income every quarter. These are great numbers. They're making 500 million of after-tax net income a quarter pretty much, and it's growing. So this growth rate, what's it going to be the same time next year? Pretty interesting. Did they have a dividend? I should have checked, but okay. So Eunice said BYRN. Let's do it. BYRN. This is Bryna Technologies. They're on my watch list as well. I forget what they do. Let me go look at their financials and see why I added them to my watch list. Because normally if I add something, there's something there that impressed me. Let me see what industry they are in. Aerospace and defense. So let's see. The revenue's up 40. That's great. So revenue's up 40 after growing 76. So it must have been the growth that impressed me here. So the revenue and their net, wow. So not only are these are small numbers. Normally when a company's like this growthy and the numbers are this tiny, they're not net income positive yet, but looks like they really bootstrapped this. Like they're making net income every quarter, even on a small scale. And the balance sheet's great. Like this is a good company. If they're making net income now, like as they scale up, like the net income's just going to explode. So they're making, what's the market? Oh, that's actually a fair market cap. That's a very fair multiple. I'm going to re-add them to the watch list. I like the growth. I wonder if there's any news around this company. But yeah, actually they seem they seem really fair. Like 100 was like a $800 million company making net income every quarter with 40% growth. I love it. What's the app again? Yo, what up, NWK? Yeah, hey, by the way, if you want to get this app I'm on, let me get this here. It's in the link tree in my bio right there. It's a brokerage where you buy stocks on. All right, so Yum Brands. Yo, I haven't looked at this stock in so long. It's actually a pretty cool stock. If you've heard of Taco Bell, KFC, this is the stock that owns it. It looks like this app is telling me that there is a bullish continuation triangle, and the rise probability is a 91% chance. So that's pretty cool. Anyway, this is like if I didn't own McDonald's, I'd own them probably instead. But McDonald's I like more. But check this out. You get a near 2% dividend yield with this company. Pretty nice dividend. And here's what they own. 44% of the revenue is KFC. Basically another 40% of the revenue is Taco Bell. And then they own Pizza Hut and Habit Burger Grill. Anyway, so they own some nice brands. They're really profitable. They make $400 million in net income a quarter. This was actually a spinoff from Pepsi. So Pepsi stock used to own Yum, and they spun it off. So that's why if you've ever gone to KFC or Taco Bell, that's why they do Mountain Dews and stuff. They only serve Pepsi products. So they have a lifetime contract with Pepsi still to only serve Pepsi drinks. Kind of cool. Happy Saturday. Did you already look at NB? I have not looked at NB before. Let's do it. What up, the Ace? Wait, NB stock. Let's see. So NeoCorp. Let's check it out, man. So small company. They're worth $600 million. That's not too bad, though. A $600 million company. They're at wow. Look at that nice, like V-shaped recovery. Let's go look at their financials and see if it's justified. Let's see what the analysts expect. So they are a revenue-less company. So actually, when we go to the revenue right here, it says no data just because they've never sold anything. They've never sold a product or a service. And we're not really seeing any expectation of making revenue anytime soon. So maybe the stock is momentuming because there's hope. Maybe soon they're pricing in a higher % chance that the product's going to get FDA approved. So I don't know much about this company. Oh, it's a rare earth mineral stock. Okay, so it's not even a okay. Revenue-less. I'm careful with them, but I know we've seen a lot of like revenue-less companies like Lithium America, MP Materials. The government is taking huge stakes into some of these rare earth mineral U.S. plays. Mr. Oh, hey, well, we'll look at GRR after this. I wanted to look at this one real quick. BABA. This is a Chinese company. This is basically like China Amazon or Chinese Amazon, but they're more business to business than business to consumer like Amazon is. But they have a nice yield, I believe. Yeah, 0.5% yield, very low payout ratio. So they have room to raise the dividend. Amazon doesn't have a dividend. I do own Amazon. I think I'd rather own Amazon than Alibaba. But check this out. They have a 19 times multiple. That's a fair multiple. They are Chinese, so that's why the multiple is kind of low. But this is in USD. They're making real profits. They're making like a couple billion in net income every single quarter. They share some of that to you via dividends. Are they doing share buybacks? They are. They are. They bought back like 3-4% of the company in the past year. So that one's interesting. What was the name of the stock you just had up that owned soda? Oh, I don't remember that one. Yum Brands, maybe YUM. That was the one. Are you talking about the stock that owned Taco Bell and KFC? But another stock that does soda is Coca-Cola Consolidated. They're the bottling company for Coca-Cola. They bottle all the soda. They even they do some bottling for Monster Beverage and for Dr. Peppers as well. Kind of cool. So, what is this company? What is Zoomed Technologies? Yeah, hey, give me the ticker symbol there and we'll try and find it for you. So, yeah, this is a stock that's kind of momentuming on new news that this is, I think, Gorilla Technology, GRRR. Yeah, they just got a $1.4 billion deal for an Asian data center. I wonder if I can find the news here. Yeah, if you kind of look or highlighted, Gorilla signs $1.4 billion contract with Freyr Singapore to build Southeast Asia AI data center. So that's a good future earnings tailwind, which will be good. Let's check out the expectations. Yeah, revenue was 18 mil. Now it's going to be 33 mil. So it's pretty interesting. I'd be careful with them, but that is some good news. You can't hurt the company. What is EPICI? What is Epic? I can't find that company unless you're talking about 1CM, the Canadian company that's worth 28 million. No, yeah, we're not going to. Dang, this stock is the same price that it was back in 2018. It's a penny micro cap. I'd be really careful. I wouldn't touch them, to be honest with you, if that's the one you're talking about. So this is a buy and hold forever stock. If you're looking for safety, quality, like you know your money's going to be safe in the long run, put it in waste management. This company, it just sells trash or picks up your trash for you. Like it's a business going nowhere. Americans, businesses, we're always throwing away trash. And this one, you can get exposure to that with a nice yield. You literally get a 1.5% dividend. That's not too shabby. And if we go to their net income right here, that's so consistent. They're making like 600 million of after-tax net income a quarter. And Bill Gates even owns them. Bill Gates owns the Bill and Melinda Gates Foundation own 8% of all the shares. So he sees some value in it. ZOMD, let's check it out. ZOMD, Zoomed Technologies. So they're a $220 million company. Look at this rally, though. This was just like 10 cents. Now it's $2 in some like crypto territory. So yeah, all the revenue comes from Canada. Let's see. The revenue's growing very nicely. It's up 40% after growing 58%. So these are some really lovely growth rates, and they're net income positive on that. No way. Check that out. 6 million in net income. They're making a couple million net income a quarter. Very strong balance sheet. Look at that. They're growing their assets while the liabilities are staying the same. The liabilities just went down. So their liabilities the same time last year were 47% of the assets. Now it's only 23. I can totally understand from a fundamental, from a financial point of view, why this stock is at all-time highs. They probably deserve it. All right, let's see here. Yeah, hey, try not to spam there. We'll get to the stock eventually. What up, Kudo? What up, dude? He said Neo. Let's do it. So maybe we'll look at Carvana. Oh, wait, EXEL. Yo, Luffy, remind me to look at EXEL. Oh, and AMD. I want to look at all these companies. So here's Neo. I wouldn't really buy this one. They just got like a bunch of orders. Like they had 100,000 pre-orders for their new van. Again, they lose money on every van they sell. So, or like SUV, I think. But here's the tough part, in my opinion. If we look at the top right, the market cap, it's a $17.5 billion market cap. So the whole company's worth $17 billion. And this is the tough part. They burned through a lot of money. Yo, what up, user? Do you even see my comments? Well, that's the first comment I've ever seen from you. I don't see your previous ones, but AST Space Mobile. Yeah, hey, maybe we'll get to that one. Remind me, sorry. But yeah, this is the tough part with Neo. They're losing pretty much $1 billion in net income a quarter, and it's really hurt their balance sheet. Like they used to have a lot more assets and liabilities. Now it's kind of choking them. So I just watch. I stay away from that one just because of the net income loss. So you know what? My bad there. Yeah, let's do it. Let's look at ASTS Space Mobile for you. That's my fault. So this is a space play, and the next 6 months, if you're in this stock, you basically have to hold it for the next 6 months, because that's where all the earnings catalysts are as they basically transit. Because right now the business, it really isn't good. Like if you look at the revenue, 1 million a quarter, like that's junk. That's terrible. Like how is the stock up so much? It's actually because of the future expectations. Literally this quarter they did 1 million, but next quarter analysts expect 25 million. And then the quarter after that, 33 million. So really watch out the next couple quarters as they realize some of their contracts. Hopefully that was helpful. Yeah, not good revenue now, but it's the future. Kind of like a Take-Two or something. Glad I bought some Amazon Friday. It looks good. I totally agree. Amazon's a great never sell. Hey, what up, Love Dollar Sign? What up, dude? He said, I'm buying AMD. Let's do AMD. Yeah, I wanted to get to this one. So AMD, I do own this one, by the way. Maybe I can pull that up for you. It's my only semi play. I almost wish I bought Nvidia or someone over this, but yeah, we own 11 shares of AMD. We didn't even time the bottom on this one. You know, the bottom, they fell all the way down to $76. Well, we bought them. Our average cost is $125, and we still made a lot of money, which is cool. So yeah, let's pull up AMD. This stock is kind of like a mini Nvidia, and I like them more than Nvidia because I think they're not experiencing the law of large numbers. Like if you look at the market cap, they're a $250 billion company. Nvidia is worth $4 trillion. If you buy Nvidia right now, they have to go to $8 trillion for you to double your money. And it's just tough for them to do that. But check this out. Here's the cool thing about AMD. Here's their PC GPU market share. A 17% PC GPU market share is huge. You know, they're in client and gaming sales, and they're a huge data center play, kind of like Nvidia. You know, these data centers need graphics cards and GPUs to power them. And AMD makes their own GPUs, so they just supply them to their own data centers. You know, for the cheapest, the newest models, the quickest, and it's genius. The growth is finally back. No longer advanced money destroyer. Revenue's up 31, and the net income is up 200. Like they're making a couple $100 million net income a quarter. Just hit a new record this quarter. Same with FCF, which stands for this is the free cash flow. They did 1.8 billion of free cash flow this quarter, up 3x year over year. And look at this balance sheet. Like I love the balance sheet on AMD. Pretty good. No net debt on them. So yeah. Okay. I'm buying AMD and it's still kind of cheap. Hey, what up, agent? Yes, sir. Let's see. Thoughts on MPWR. Is that Monolith Power? Or, we'll look at Chipotle. I want to look at Chipotle too. So this is Monolithic Power Systems. They've had a pretty monolithic stock price appreciation. What are they worth? $42 billion company. That's a pretty good market cap. So they're worth $42 billion. They have a 0.7% dividend yield, very low payout ratio. But notice how the dividend in 2020 was $2. Now it's $5. So they're raising their dividend very fast. And they traded a fair multiple. This might be propped up though. Let's go check. So yeah, we see that net income where they made 1.45 billion. They probably didn't actually make that because if you go to the operating profit, yeah, so that was a one-time little gap net income adjustment. No big deal. That makes the PE actually a lot higher, but they're really high growth. Analysts know this. So if you look at the revenue's up 31 after growing 15, and they're making net income every quarter. So the actual profit, you look at, the profit was up 41%. And look at this balance sheet, man. This is great. This is a great balance sheet for Monolithic Power. So that one's, I can see why they're at all-time highs. So here's Chipotle. This is one of the food stocks that have kind of been getting wrecked, and it's not just Chipotle. Unfortunately, it's kind of like industry-wide. You look at Kava stock, CAVA, it almost looks identical to Chipotle, this kind of downtrend, or even like another restaurant like Wendy's, like RIP Wendy's. Look at that stock price. Like Wendy's is literally the same price that it was back in 2007. So a lot of these restaurants are really getting squeezed right now. Their margins are. And here's the thing. Chipotle's worth putting on the watch list, but I think they might fall a little bit more. So I'm really waiting to buy more. Here's why. We look at their net income multiple. They're still trading at a pretty high premium for the industry average. You know, they're trading at 35 times PE, Industry average is 27. And it's okay to have it's okay to have a high PE as long as you're high growth. But if we look at the most recent quarter, they actually missed on revenue by a chunk there. And that's not great. If you miss on your revenue, you miss on your growth. So when we look at the total revenue, the revenue on Chipotle was only up 3% year over year. Like, this is why the stock has been getting hurt so much. They're kind of losing their growth. So the revenue's only up 3. That really doesn't beat inflation. So the revenue's up 3, and the net income, the profits are actually down by 4. So that means the margins are going down, input cost. I'm not shocked about this. Again, it's not just Chipotle facing this issue, but they're the one of the best well-run restaurants out there, like a McDonald's, a Texas Roadhouse, like great management. Well, Brian Nichol just quit, but became the Starbucks CEO, but yeah, I think they're worth looking into, but I wouldn't be shocked to see Chipotle go a little lower. So Eric said, what about AT&T stock? So yeah, ever since the Warner Bros. Discovery spinoff, AT&T has done pretty good. But again, this one I don't really see outperforming the market in the long run. Like, AT&T is literally the same price that it was back in 1997. So, just beware of that. But they've had a pretty monstrous return the past year here. Like, that's insane. A lot of people like them for the high dividend. Like, they cut their dividend in 2021, but the yield's still pretty fair here, a 4% dividend yield. So you're probably just buying this for the dividend. You're not buying this with expecting to outperform the S&P 500 in the long run, because again, it's the same price that it was in 1998. That's rough. Ben said, I made 2,600 on options. Oh, hey, heck yeah, dude. That's what's up. YC said, are you in stock? Yeah, hey, YC, thanks again for the roast there. I do appreciate that. So I'm going to give you my honest thoughts here. You're probably not going to like it, but this is Sunrun right here. This is one of the solar plays. I'd rather buy a First Solar or an Enphase Energy over this one, but let me just show you the numbers for yourself so you can draw your own conclusion. If we go to the net income losses right here, that's a tough thing. Remember, their company was worth $4 billion, and they lost $300 million, $3.4 billion. That's an insane net income loss. So, just beware that this company just burns through net income every quarter. At least the revenue grew 8% year over year. But yeah, they got a lot of debt to pay. They're burning through a lot of money. And if better solar play, in my opinion, check out FSLR. They've kind of been doing a little better, but it's because the fundamentals are way better. We go to this company's net income, they're actually net income positive every quarter, making a couple $100 million a quarter. Enphase Energy is decent too. Hey, what up, that man? He said DNN. Any stocks that have moonshot potential in 10 years? All the stocks I own, I think Google, even Amazon, like, even though it's a Max 7, like even Amazon, I own a lot. There's a lot of stocks I wouldn't buy at this valuation, but even though I wouldn't buy it at this valuation, they'll probably be a multi-bagger for in 10 years from now or whatever. But yeah, these are all the stocks that I own in here that I think are great fundamentals. Robinhood, SoFi, Disney, Disney not so much. I don't expect them to do great over 10 years, but Supermicro, P6, Pod, Sprouts Farmers Market. So anyway, let's keep going. So let's get to DNN here. I forgot, is that Denshin Mines? I think this is a gold play. So yeah, if we look at this stock, if you're wondering why or it might be a uranium play. Let me double check real quick so I get this right. So they're a mining company. Let's see, is it gold or uranium? It's uranium. Okay, so yeah, this is a uranium play. The commodity of uranium has done very good ever since the executive order stimulating nuclear reactors, because nuclear reactors are powered by uranium. And we're not trying to buy our uranium from Russia anymore. We're trying to source it from Canada in our own mines. So check this out. If you look at the uranium ETF, ticker symbol URA, it's pretty much at an all-time high right now. I'm a fan of picking and choosing your own uranium stocks, and I don't own the commodity uranium. I'd rather own the nuclear reactor, which I do with CEG, but I buy Cameco, CCO, UEC is okay. They bought a uranium mine off Rio Tinto. I'd be careful with that one specifically, but they're going to follow the momentum of all the other uranium companies. So Zachary said, yo, hey, good to see you too, Zachary. Hope you're having a great day. So someone said UPS right here. Here's so you can check if a company has an unsustainable dividend. Do you want to look at the most recent company? Hey, if you got a stock you look at, let me know. Sorry if I don't get to all of them. I'll try and get to all of them here. So here's UPS. I'm reading the YouTube stream right now. chat, but I am reading the TikTok and YouTube stream chat. Don't worry. So here's UPS right here. If we look at the dividend, and if you leave a comment on the YouTube stream, I will for sure get to that stock always. But here's UPS right here, the dividend. They have a 7.8% dividend yield. Oh yeah, my YouTube channel is called Nathan Robert. Just type into YouTube Nathan Robert. I'm streaming on there, and it's also in the link tree in my bio. But here's how we can tell if UPS has a safe dividend. That's a nice yield if it was sustainable, 7%. But if we go to the revenue's down 2.7. So the lifeblood of the company, the sales aren't growing. And if we go to the net income is down by 9. But look at this number. They did 1.28 billion in net income. Let's go see how much the dividend cost exactly. That's what I like checking, the exact cost of the dividend. And they literally cost 1.35 billion in net income every quarter. So they actually couldn't afford the dividend this quarter or last quarter. So yeah, they made 1.3 billion net income, but they didn't retain any of it. They technically lost net income because they had to pay out more than they made. So that had to come from somewhere. Do you trade stocks as a full-time job or so? No, neither. I don't even trade stocks. I just like buy and hold stocks to just preserve and build wealth. All right. Futu. Yeah, I love Futu. The next, I get like next SoFi, next Robinhood. I love Futu. So someone said, Elmer said, UROY. What do you think? This is Uranium Royalty. So let's see, did they make any money? So they're a Canadian company. So we're going to convert their currency from CAD to USD. And let's see, do they have revenue? They do this quarter. They report in fiscal year. That's why it says 2026. So they did 23 million in revenue and did $1 million in net income on that. Let's hope they can continue this trend. Are analysts expecting that? There's no analyst expectations, but this is a fortress of a balance sheet. Man, they literally have no debt at all. So Uranium Energy, is that UEC? Uranium Energy Corp. That might be UEC is the largest shareholder. Anyway, you're watching for the next couple quarters here because they basically just made revenue for the first time. That's really interesting. Could be another uranium play. So that man said EQX. Let's do it. EQX. Then we'll look at SDG. Is this? I don't know what that is. So here's Equinix Gold. Yeah. So a lot of the gold stocks are on fire, of course, just because the actual commodity of gold is at all-time highs. Let's see what the financials are doing. So these are all the mines that they own. Greenstone, how's that doing? Oh, it doesn't show us. Los Filos, so all those different mines. And the revenue's up 77. And out of that, they technically made money. What happened there? I don't know. Anyway, that's a gold play. It follows the commodity of gold, and the commodity of gold is just literally ticker symbol IAU. Let me see if I can get this to pull up here. IAU, come on. And also GLD. Sorry, my Wi-Fi is really bad right now. It just always is, I guess. If you want to hit the follow button, we stream every day. I don't know how. We'll probably look at a few more stocks here. And we're going to be streaming later tonight. But oh yeah, by the way, double stream today. We're going to be streaming in a couple hours from now. But yeah, here's the literal commodity price of gold, IAU. It's at an all-time high, so I'm not shocked to see the gold-adjacent stocks also at all-time highs. So let's look at SDG. What up, Dan? So this is the MSCI Global Impact ETF. So it probably just owns a bunch of global names. And look at that. They're not at an all-time high right now. You know, the US market, the S&P 500 is at all-time highs. This one is well off. Let's see what it owns, though. So it owns First Solar, Vestas Wind Systems, East Japan Railway. NVIDIA's 4% of it. So yeah, a lot of international stocks I've never heard of before. Kimberly-Clark. So that's interesting. I just don't know if that's will outperform in the long run. Seems really niche. Pretty niche. What about silver? You know, I don't know. I don't love silver. I think gold's the best like precious metal. I mean, literally Google, like the company Google is worth more than all the silver in the entire world. The whole market cap of silver. Google's worth more than. But not gold though. Gold's worth 25 trillion. What up, Jeffrey? Hollow spikes in past. What is that? Is that a ticker symbol? HOLO? Yeah, what is a $70 million company at all-time lows? I don't know if this way. They're a Chinese company too, so this is in Chinese. I'd be so careful with that one. All right. How much higher do you see CEG going up? Eventually, I see CEG going to $400 plus. We're just really waiting for the Calpine merger news to come in Q4. Are we in Q4 now? Wait, I don't know. Hey, Mysterio, dude, thanks again for the rose. He said AC in stock. This is Acupuncture or Akinter, something like that. So let's go see what this company does. I forget actually. So they have not been doing too well. That's unfortunate. So I feel bad if you own this stock. It's probably not doing too well. I think they just reported earnings though. So let's go see what those numbers were. So the orange line's what the analysts expect. They beat on revenue. They missed on net income. So was that real? Let me go to the operating profit. It was down 12, down. Yeah, so that was real, unfortunately. So it looks like they missed on their profits, which is maybe why the stock is falling. I don't know. I mean, they're still making a lot of money. Like, this is the great news. They're super profitable, making 1.6 to 2 billion of net income every quarter. Like, this is great net income. And maybe just the investors are worried about the slowing growth. Like, revenue's only up 7. I mean, mid-single digits, that's not too terrible. Revenue's up 7, but net income fell by 15. And that wasn't some like one-time adjustment. The profits rate fell by 12. So I'd be careful with that one. Honestly, I think it's worth looking into. But I would be careful with that. I wouldn't have it as a huge position. Nothing really. I love those net income numbers, but not too growthy as I love. Jen said GRNT stock. What is GRNT? HIMS. Yo, maybe we can look at HIMS too. So this is Granite Bridge Resources. This is a $750 million company. Let me see what they do. Do they have a dividend? Hopefully. So I don't love when like a $700 million company is paying dividends. Like at this growth stage, at this small market cap, they should just be investing in the future. But looks like this is a huge yielding play, a 7.6% dividend yield. They do oil and natural gas development. The revenue's up by 20% year over year. That's good. And they're making net income every quarter, which is good too. Make basically 10 to 20 mil in net income a quarter. I just don't love that high yield. So I don't know if that'll outperform in the long run. But yeah, it looks like it's a dividend play. Elmer said BMNR. So this is Bitmine Interversion. This is the Ethereum stock. So basically, it's an Ethereum holding company. Basically, Ethereum MicroStrategy, basically. And if we go to where their revenue comes from, again, crypto company. So 92% of the revenue comes from their self-mining operations. And, they don't really have any revenue. You basically just value this one off their net asset value, their NAV of their Ethereum they own. And you just compare that to the market cap. Ooh. SDM stock, Smart Digital Group. Yeah, I don't really like to cover these kind of stocks. They're worth $40 million. Something just happened though. They were down 86%. That's a hefty fall. I don't know what happened there. So without that news, I don't know what happened. I'd be really careful with that one. AAR Corp. Ooh, look at Google too. But let me know what you're talking about. Are you talking about AIR stock or AAR Astral Resources? I don't know. So let's look at Google right here, dude. I love Google. Perfect buy, never sell stock. And then we can look at HIMS too. So yeah, Google's at an all-time high. This company, it's not worth trimming. Hey, thanks again, Mysterio, for the more roses there. But this company, even though they're pretty close to all-time highs, like don't sell out of this one. Don't trim it. Don't take profits. I own Google as well. I might be biased, but they still traded a pretty fair valuation. They traded 26 PE, which means they traded 26 times net income. This is like an ETF in one. They own Android. They own YouTube. They own Waymo. They're in quantum chips. They have cybersecurity businesses. They're in Google Cloud. They just acquired Wiz. Just the Google Cloud revenue is up 32 after going 30. They're an AI play. Gemini's really big, doing great. And this is the best part. They print money. Like, check this out. They're doing basically 30 billion of net income a quarter. And I bet you're wondering, like, what is Google doing with an extra 30 billion of after-tax net income a quarter? Well, since they're so big and they can't really acquire any companies, they just spend like most of that in share buybacks. They literally spend 15 billion of net income a quarter solely buying back their own shares. You also get a dividend. They only spend 2.5 billion a quarter on the dividend. That means there's so much room for them to raise their dividend. They could afford to make this like a 1.5% yield, but they just choose not to because they're so capex heavy and they like to invest in the future. They don't want to just lose all their net income to a high dividend right now because they're still so cash from investing activities heavy. They literally invested 25 billion into the in future businesses, and I love this investing into the company. So yeah, I just never sell Google. I can show you my position in them too. I own them here in my dividend growth portfolio. So yeah, I got 19 shares of Google. I love them. DCA into Google still? Yeah, I mean, I wouldn't go crazy with the DCA here, but if your intention is to just never sell Google, like I wouldn't call you crazy to buy it even now. Like a little bit, like add some more shares. Kudo said, wait, what is CMR? Let me find out CMR. This is BlackRock Asset Management. Oh, yeah, so this is just a 1 to 3 week Treasury ETF. Um, or no, it's not. It looks like it actually owns a bunch of bonds. So you don't lose any money. This looks exactly like a bill or something. They're collecting IOUs basically. So yeah, let me see if I can find BIL here. Yeah, look at this. It's one of these ETFs where you just collect the dividend every month and then it goes back down. Yeah, basically money market. So QMMM. So hey Cliff, I appreciate that, man. Yeah, unfortunately on TikTok like 30 minutes ago put a thing in saying your stream can no longer be recommended in the For You page. So it's impossible for my viewer count to go up anymore. So I appreciate everyone being. By the way, if you wanted to follow button, I appreciate that. We stream every day. The number one way I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. The only way to support me, best way to support me is just subscribe to my YouTube channel. I'm trying to build up my YouTube channel. I'm streaming on there too. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But here's QMMM. Haven't heard of this company before. They're a $6.8 billion company. And look at that rally. So there was some sort of news here. Like that's not, that wasn't earnings. So there was some sort of other news. Maybe we can find it if we go back here. I don't think we're going to be able to. Do they have revenue? So unfortunately, I just can't tell you anything about this company because I don't think they have any sales. Let me see here. Revenue was $1 million. Losing. So there was some sort of news that I don't know there. Ryan, what up? He said, I got a question or I got a cute. What up, dude? If I'm new to this, what do you suggest I buy for stocks? You know what? I would not financial advice, of course. I recommend you just buy the S&P 500 as the backbone of your portfolio. Investors try to outperform this and they can't, so make it the backbone of your portfolio. So buy the S&P 500 VOO and then buy some individual companies in the S&P 500 that you use and love. Like, do you have an NVIDIA graphics card? Like my computer I'm right now has an NVIDIA graphics card. Maybe buy NVIDIA chips. Do you use Microsoft? I'm on a Microsoft computer. I use Office, OneDrive. I also use Apple. I use Amazon. I use Meta. I use Google. Like I use all the companies. Invest in what you use. Well, like every month we get our utility bill, and I invest in the utility company that we get from. I own McDonald's stock, so and make sure they're good, financially sound companies. Look at their financials. Hey, what up, Jay? So YouTube said CRM Salesforce. Yeah, this is one of the software names that have kind of been getting hurt by the AI thesis. Like AI might replace, also the white collar job market. Really, Salesforce really relies on the white collar jobs, and that's not doing too great right now. But yeah, Salesforce right here. If we look at the dividend, you now get a yield, a 0.7% dividend yield. And I love how diversified that they are. They own some great assets, like they own Slack, Agent Mule, and look how diversified that they are. 25% services, 22% sales, platform another, integration, analytics, marketing, commerce. So I love how diversified the revenue is, and I love that they just acquired INFA and they're expanding margins still. If we go to their net margin right here, it was an 18.5%. It's never, ever been above 18% before. So they had a record net margin this quarter. Revenue's up 9.7. Net income's up 32. So they're kind of like an Adobe right now where they're getting hurt by the thesis, but I think they're worth looking into. The risk to reward's starting to look good. I think they might go a little lower, but how about AI education stocks? Hey, that'd be like Google, right? With Gemini or ChatGPT. Yeah, Google, I love them. Google went from an AI loser to an AI beneficiary. Let's see. What up, Jay? He said, or Johnny, 20% individual stock. Yeah, and here's what I own, by the way. Like, I own a lot of those companies like I was talking about. I own Google, I own Meta, I own McDonald's, Constellation Energy, I own Amazon in here, I own Coca-Cola, DocuSign. So I own a lot of the companies that I actually use. Are you lying? No, hey, hey, I'm not an expert. None of this is financial advice, bro. I'm not an expert, just a college student. Just on here, give my opinion. What up, Donnie? So let's see. Buy via and QQM. Yeah, I agree. QQM is great as well. So let's look at Hims right here. We'll look at a couple more. So this is Hims and Hers. This, a lot of people think this is a meme company, but they actually have some pretty good financials. But one thing that's really going to be a headwind for the company is the fact that a lot of this company's growth. Actually, let me just go to this screen. If you look at the revenue, it's insanely growthy. But what a lot of this growth has come from is they sold a weight loss prescription on their website. Well, now they no longer sell any weight loss prescription on their website. And they used to sell Ozempic, but then Ozempic ended their partnership with them out of nowhere. So that might hurt future growth. But for right now, the business is booming. Revenue's up 72 after growing 52, and their net income positive, making 40, 50 mil in net income a quarter. I like this company. But watch out the next couple of quarters. They're answering those questions like they just introduced like a testosterone product, and I think they're trying to find another weight loss prescription seller. All right. I am licensed and I know far less than you. These tests are a joke. Your stuff sounds like China. Hey, thanks. What's up, Donnie? Hope you're having a great Saturday, by the way. We'll look at a couple more here. By the way, if you want to hit the follow button, we stream every day, sometimes twice a day, and we're going to be streaming in a couple hours from now as well. So here's Genius Group. I'd be really careful with this one. If we look in the top right, they're only worth 83 million. It's hard to trust these kind of stocks, in my opinion. Like, they're only worth 83 million, and so they're a revenue-less company. This is from 2022. So yeah, I can totally see why they're at all-time lows. But here's a stock that I can see why they're at all-time highs, because this one actually has good growing fundamentals. Like, if you ever look at a stock and you see them like with a monstrous appreciation in stock price, like, go check out the financials and see if it explains it, because this insane stock price appreciation is explained by how growthy they are. If we look at they're a fintech, they have their own banking charter. If we look at their financial services business, it is booming. It's up 105% after growing 80%, after going 222. Like, there is no red numbers. It's a record every year, every quarter. And they're beating on expectations as well. That's what the orange line is. The orange line is what the analysts expect. They beat on revenue. They beat on net income every quarter. They beat on EBITDA every quarter. They're super growthy. I think people are just really taking SoFi serious. They did 850 mil of revenue this quarter. Out of this 850 mil of revenue, literally 100 million of it was after tax net income. So that's what's cool about SoFi. I really like them. I might be biased. I do own them. I regret every share I've ever sold to them. I never expected them to grow that much, their fundamentals that much, and it beat my expectations too. That's free cash. What's the cash flow? I can, if you have a stock you're talking about, I can show you the free cash flow number on it. Here's NEO right here. Like, here's the free cash flow number. You just go to this right here. That's what FCF stands for. And let's see what it is on NEO. They did, this is from 2021. So because they're Chinese, they're not going to give us that. Darn you, NEO. They're an ADR. So anyway, the thing is that scares me around NEO, like, if I'm being totally honest with you, is just the fact that they burn through money. Like just, they've done this for eternity. Like, they literally lose over 500 million to $1 billion in net income every quarter. So just be careful on NEO. They're a bit leveraged too. The last quarter, the liabilities were the same as the assets. So they just got a bunch of pre-orders. The reason the stock is rallying because they got 100,000 pre-orders on like a new SUV vehicle, but they lose money on every car they sell. So it's tough. Free cash flow on SoFi. Oh, let's see. SoFi. The free cash flow is probably negative just because of the industry they're in. But let's see. Maybe it'll surprise up. Yeah, so look at that. The free cash flow was negative 1.5 billion on SoFi this quarter. But again, the metric you really want to look at, because you don't. Here's the good news. The reason the cash flow is so negative is because if you go to the cash from investing activities, they are investing in the future. Like if this number was positive, that would mean they're selling assets, but they're actively investing in the future. They reinvested 1.7 billion into new assets. So nothing I'm concerned about there on SoFi. Growth is insane. It looks like they're investing, their heavy CapEx investments are paying off because the growth is insane. So yeah, let's look at Futu right here. So if you're wondering so I have a bunch of apps here like Robinhood. They're publicly traded. So Robinhood is ticker symbol Hood. Webull is ticker symbol Bull. And this app right here, this brokerage I'm on right here, if you're wondering this is another brokerage kind of like Robinhood. And you can, if you want to get this app I'm on, it's my favorite brokerage. It's in the link tree in my bio, the very first link there. But this app I'm on is literally publicly traded. So this app I'm on, this brokerage I'm on right now, here is their stock publicly traded. I think they're like the next Robinhood. They have just good fundamentals. That's why I like this stock. They have good financials and are at a low multiple. They trade at 23 times net income. Again, this platform I'm on right now, even if this company were to go bankrupt, your assets are still safe. Actually, FDIC insured with SIPC insurance for up to 500,000 of assets. So even if this company goes bankrupt, you're good. Your assets are fine. But it's good to see that the company I keep my assets with are doing great. They made 330 million in net income this quarter. Their margins are insane. They're just so growthy. Revenue's up 69 and the net income's up 111. So they expanded margins. They legit had a 48% net margin. How do they make their money? Well, they make it off high margin commissions and also off high margin interest income. Look at the interest income growth. That's up 43% year over year. And they also just gone to crypto. That goes into the other income. And look at the growth, triple digit, 170% growth. So I really think this is a great growth company. They also do special dividends. Oh, we can see their total number of users. Users is 27 million. Average client assets were 111 billion. So yeah, anyway, I like the fundamentals of this company right here. And that's why I own them. I might be biased, but yeah, that's Futu right here. That's this app that I'm literally on right now. And if you want to get this app I'm on, if you want to use my affiliate link, it's in the link tree in my bio, the very first link there. If you go and deposit $100, we'll both get like a fractional piece of NVIDIA, which is pretty cool. But let's keep going here. Let's look at a couple more stocks. Futu versus Bull versus Robinhood. Yeah, Robinhood and Futu are the main winners there. Honestly, out of all three of those, Futu is the best pick right now. Best fundamentals, highest margin, in lowest multiple. Like Futu is a beast. I love them. So we can look at, that man said Luckin Coffee. So this is the company giving Starbucks a run for their money. Wait, it's LKNCY. So yeah, this is Luckin Coffee. Hey, what up, Caden? Yeah, so they've actually done very well. Check this out. Yeah, they are Chinese. If we go to where the revenue comes from, literally 100% of the revenue comes from China. But this is literally Chinese Starbucks with actual good fundamentals. Like if you look at the revenue, this is insane growth. Like insane. The revenue's up, and this is in USD. We've converted it. The revenue's up 49% after growing 35%, and their net income positive every quarter. They're actually, I think they have double the margin of Starbucks in the most recent quarter. They're doing a couple hundred, if you average it out here, they're doing over 100 million in net income a quarter. Let me see what their same store sales growth is. Here's their number of stores. Look at that. They've opened so many stores in just a year. Their partnered stores and their self-operated stores. Same store sales growth is 13%, obviously just from opening new stores. But store level operating profit margin is a 21%. So anyway, trading at 22 times net income, like that's real. They're actually trading at 22 times net income. They'll probably do a dividend in the future. So that's your Chinese coffee play. Pretty cool. I use Wealthfront and Fidelity. I'm old school. Hey, those are still good. I mean, can't say anything wrong about those. They're just probably not as useful. Like if you want to analyze a company, you probably don't get much on them. But it's okay. You can go to a website or something. But anyway, here's AER Cap Holdings. Look at them, all-time highs. Good. Congrats if you own this one, Aaron. Let's see. They're in commercial flight equipment. Where does the revenue come from? So actually 70% of the revenue comes from outside the US. Only 15% of the revenue comes from the United States. Let me double check what they do. This company is actually based in the Netherlands, I believe. Or what country was that? I want to see. Please, come on. Let's load. Sorry, my Wi-Fi is bugging today. In Ireland. Okay, this is an Ireland company. They're headquartered in Ireland, so you're probably paying an ADR fee. So that's why most of the revenue comes from outside the US. Look at this revenue. The revenue's only up 1% year over year. Like that's low single digits. That doesn't beat inflation. So revenue's up 1, but look at that net income growth. Actually, that was a one-time adjustment. The net income wasn't actually super high like this. You always want to blend the net income and operating profit together. The actual operating profit fell 20% year over year. So nothing's really blowing me away here. The stock's done great. Like that's the kind of shocking part. The stock has done phenomenal, and the fundamentals don't look too great. Sometimes that happens, though. Like, look at that. They missed on revenue, and this was a propped up fake EPS number. So I just be careful with that one. It could be good, though. Maybe there's some future growth. Hey, Jello, what's up? Let's check out Oracle. Yeah. So Oracle, this is the cloud play. I think, what was it? Oracle's backlog billings were like 330%, a huge surprise to the upside. They're opening up like 30 new data centers. They're going to be buying a bunch of NVIDIA chips, AMD chips. Like they just sent up the whole ecosystem. The whole AI ecosystem went up after that day. But yeah, this is your cloud play. SoftBank has a huge stake into them. If we go to the net income, it's really solid. They're doing $3 billion in net income a quarter. The actual numbers this quarter weren't good because on the numbers, they missed on revenue, they missed on net income, they missed on every metric, but it was the future guidance that sent Oracle up, that future billings growth. It was insane. Now, the chart doesn't look too well. I think this one's probably going to go a little lower. I'm not a huge fan of this stock right here, just because of how they have a lot of debt and the dividend eats up most of their net income. So if we look at this right here, they did $3 billion in net income. So look at this payout ratio. They have or let's just do our own payout ratio multiple. So they're doing $3 billion in net income a quarter, sometimes a little more. And it's probably going to be even more than that if they're growing like crazy. But the dividend cost $1.41 billion a quarter. So yeah, the dividend is like a 40% payout ratio. And they have a lot of debt. Yeah, look at actually, I think they have like $100 billion of long-term debt. I just be careful with Oracle. What are your thoughts on PPTA? What's this one? And hey, what up, Jello? Yeah, we'll look at Marvel maybe. Look at DeFi. We'll try and get to these. So yeah, sorry. By the way, if you wanted to follow on, we'll be live later today. TikTok's already restricted our streams, so no one in the For You page can find us, sadly. But anyway, check this out. $2.3 billion market cap, stocks at all-time highs. Congrats if you own this one, because this stock has been booming. Let's see what they did. So they're a revenue-less company. That's actually a little surprising. So if we go to the revenue down here, it says no data because they've never sold anything. They've never sold a product or a service before. So my guess behind why the stock is rallying is because maybe they're finally going to soon be able to sell a product. That would be my guess. So it looks like they're a precious metal company. We've seen a lot of the precious metal stocks rally, MP Materials, Lithium Americas on government stakes and stuff like that. So favorite tech growth ETF, QQQM. Yeah, if you're looking for a growth ETF, tech-heavy growth ETF, check out QQQM. A lot of people like the normal QQQ, which is okay, but this one is literally the exact same ETF run by Invesco, run by the exact same people, exact same NASDAQ 100 strategy, exact same holdings and weightings, but with the 0.15% lower expense ratio. So for every $1,000 you put in this one, you're saving $15 in yearly fees versus QQQ. So that's what I like about QQQM. Obviously, they don't market and advertise QQM because they don't want, then they'll make less money. Yo, Anthony, that is not a sector I would want to be invested in. I'd be careful with that. Just that sector, so here's ISSC. This is Innovative Solutions and Support. So this is a micro cap, but out of all the companies out there, like look at the market cap in the top right. The whole company's worth $208 million. You know, that's a pretty small market cap, but here's the thing. Out of all the $208 million market caps out there, I like this one because they're actually net income positive every quarter. So that kind of takes a lot of risk off the table. The fact that they're already making net income every quarter, and look at how growthy they are. Revenue's up 105 after growing 47. Again, small numbers. It's easy to grow 20 from 11 to 20, but I've loved that they're net income positive and they have a pretty decent balance sheet too. So yeah, there's ISSC. Do you ever trade futures? I actually do not. I don't do options either. I mainly, it's boring for TikTok. I'm surprised a lot of people are here. I appreciate that. I do the most boring strategy out there. I literally just buy and then never sell. I kind of just diamond hand. So RCT, is that Rocket Mortgage or no? That's RKT. This is Red Cloud. So $100 million market cap. That's a super small market cap. Let's see what they do. So, oh, that's where all the revenue comes from. Looks like Argentina. And let's see the revenue here. The revenue, well, look at that. For the full year 2024, that's a great increase. It's at a record, 40 million, 45 million. For the full year 2020, it was 3 million. And they did lose some money on that, but that's all right. Yeah, look what that did to the balance sheet. Whenever you lose net income, that has to come from somewhere. So that really hurt their balance sheet. But I love how growthy the actual sales are. Do we get the quarterly data? We might not. Oh, well. But I'd be so careful. They lost 50 million, and wasn't the whole company worth 100 million? There could be real bankruptcy risk with that company. So watch out. So here's DeFi. So this is Hashdex Bitcoin Futures ETF. I think this is a just Bitcoin holding company. So yeah, 99% of the assets are just Bitcoin. And they have only 14 million worth of assets are in this ETF. Hey, Luffy, he said ISRG. Yo, I love ISRG. This is one of the medical device companies that actually have really good fundamentals, sound fundamentals. But I think the reason the stock has been falling lately is just because the high multiple. It kind of needs to get a bit back to reality because they're trading at 61 times net income, but they absolutely deserve a high multiple because they're high growth. Check this out. They sell instruments, medical instruments and accessories in this business. Like there's no red numbers ever. It hits a record every year, every quarter. Revenue's up 18 after growing 15 after growing 20. So the revenue is insanely growthy. And after they sell them the machines to the hospitals, they also service those. So if we go to their services revenue, it's all reoccurring. I love this. It's also super growthy, up 23% year over year to a new record. And it's not just the fact that they're really growthy and they're making revenue, but they're making real net income. Look at this. And it grows. So what's it going to be the same time next year? But they're making basically 700 million of after-tax net income a quarter with a fortress balance sheet. They literally have no debt at all, completely debt-free company, 5.3 billion of cash on hand. That's a huge safety net, gives them tremendous freedom, takes a lot of risk off the table, no debt on the books. So that's why they're on my watch list too. The multiple is still a little high, so I wouldn't be surprised for maybe it to trend down a little more. But I wouldn't call anyone crazy for buying that one because they're a good quality fundamental stock. When you say you do that every day, you're not kidding. Hey, Charles. Yeah, what's up, dude? Good to see you, man. Yeah, I try to stream every single day. And if you missed anything, I stream on YouTube and you can replay it. So someone said, oh yeah, someone asked, the interest rate cut probability for October 29th is at 87%. So that's kind of a cool little metric we get there. But I wanted to pull up, not this one, it was Shopify. Yo, YC, what up, dude? So yeah, Shopify, I love Shopify. I used to have a Shopify store. It's a great business model. And that's also in the Cathie Wood portfolio. So if we go to Cathie Wood's holdings right here, 4.5% of her portfolio, because she has to make all her trades public and stuff, is in Shopify, a great growth stock right here. They're an e-commerce play. And if we go to their annual revenue right here, this is why they deserve a high valuation. The revenue is so growthy. It hits a new record every year, every quarter. And they're not just making, a bunch of revenue, but they're making a bunch of profits. If you go to the free cash flow, and it grows like crazy, they're making a couple $100 million of free cash flow every quarter and of net income. If you look at last quarter, it says they lost 600 million. They actually didn't. It was a little one-time adjustment basically from an acquisition, because you blend them with operating profit, they're really net income positive every quarter. They're making a couple $100 million a quarter with another one. It's another company with a phenomenal balance sheet. These are the reasons why I love these stocks. So put them on the watch list or something, because Shopify is great. Might be a little high PE right now, but even on weekends, take a break. Hey, Sunday is my favorite day to stream. We'll be streaming twice on Sunday tomorrow. I don't know what stock to watch for Monday, but I do believe we'll see a big crypto. Hey, what up, NASCAR? Good to see you. Can AMC make a comeback? I don't think so. That's a real meme stock you probably don't want to touch. And well, actually, let me just see. AMC Entertainment. Oh yeah, hey, when I signed up for this app, they gave me a free share of them. I guess that was $38. I sold it at. Yeah, by the way, if you want to sign up for this app, you'll get, if you sign up and deposit $100, we'll both get some free stocks. It's in the link tree in my bio, the very first link there, if you want to get this brokerage I'm on. It's my favorite one. But anyway, here's AMC right here. Here's why I really want to touch this one. You're kind of buying them for the meme. If we go to the net income right here, they lose net income every quarter. They have a leveraged up balance sheet. Yeah, lots of debt. Hey, you're kind of just waiting for the next roaring kitty tweet moment or something. I don't know. Yeah, just be so careful with that one. So what is this one? I hope that I can find this one for you. ISTKF. And then I want to look at, yeah, Meta. So yeah, I look up ISTKF. I can't find that one. Actually, then yeah, we'll go to Meta real quick. So Meta, this is a great just buy and never sell company. I mean, they own Instagram, WhatsApp, Threads. Did you know Threads is now nearing the same daily active users as X, which is pretty insane because they just created that. And they traded still a pretty fair multiple. They trade at 26 times net income. You know, for Meta, for a Mag 7 company, I really feel like it could stretch up to like 30 before it really maxes out. And check this out. Their daily active users are 3.48 billion daily active users. It's insane. They're printing money, basically 20 billion in net income a quarter. They're expanding margins. This is a $2 trillion company with 40% net margins. You go spend $100 on Facebook ads or whatever, $40 of it is after-tax net income for Meta. It's just crazy. So yeah, I love them. Do you own Palantir? I do not own Palantir, but I would love to own them. So someone said Marvel. This is a chip play, kind of like a really small Nvidia. You're really watching out for the next quarter here. If we go to the expectations for next quarter, check this out. They're expecting $1.40 of EPS. They just got net income positive. If we look at the past 3 quarters, they made, $200 million every quarter. If we zoom out, this company used to burn through net income, a couple hundred mil a quarter, but now they're finally making net income every quarter. This 194 mil of net income was the same as 22 cents of EPS, and the EPS next quarter is expected to be $1.40. So watch out for the next quarter. If you're in the stock, you want to basically hold it for 6 months and see what happens. All right, cool. So, I'm buying as much at B. What is BMNR? Oh, that's that Bitmine inversion. So yeah, hey, if you're buying this, you're kind of just buying pseudo Ethereum. What this company does is just own Ethereum, and I think they mine Ethereum as well. If you go to the revenue, 91% of the revenue, is from their self-mining operations. So basically, it's a crypto proxy to Ethereum. They trade off their net asset value of the Ethereum they own. They like to issue shares and then just buy Ethereum with it. I know Tom Lee works for the company. The Permabull. So what is VFS? I haven't heard of this one. VinFast Auto. Okay, so unfortunately, this stock is at like an all-time low. I know a lot of people don't love the automobile industry, but they actually still have a pretty decent market cap, a $7.4 billion market cap. Oh, so we're actually going to... Oh, wow. So this is VND. What country is that? Vietnam. Okay, so this is a Vietnam car company is what it looks like. Car, e-scooter, kind of cool. So 85% of the revenue comes from Vietnam. But look at this. Again, I can't convert their currency for some reason. But they yeah, this is not USD. They lost $20 trillion of whatever Venezuelan dollars, or I don't know. Anyway, I'd be careful with that industry. Looks like they're losing money every quarter. So, Microsoft. Oh, hey, yeah. We'll look at hey, try not to spam there. Yeah, we can get to NVO right here. Novo Nordisk. Yeah, so this is your weight loss prescription company. Basically, one reason why the stock has been trending down from its peak up here is because sadly, they lose their exclusivity. This company owns Ozempic. Ozempic is what Elon Musk is on, weight loss prescription. They lose their exclusivity to that in like 2 years. So that's not great. It's kind of like a big headwind for their growth. Also, they missed on net income this quarter, they missed on their expectations this quarter. But yeah, 93% of the revenue comes from their obesity care products. And right now they are printing money. Check this out. I mean, they're making $4 billion plus a net income a quarter. So right now the financials are very sound. You get a 3.3% dividend. That's crazy. And they traded an industry low multiple again for the reasons I just mentioned. But yeah, industry have at 22. They're at 15. I do like Novo Nordisk, but I wouldn't have it as a huge position. They're seeing a lot of competition from Eli Lilly as well. Ghost said something was stolen from my house, $70. Can I make it back quick? Hey, again, none of this is like get rich quick. We're talking about just stocks you want to just buy and hold forever. Like the S&P 500, for example. This isn't get rich quick. It'll never move like 5% in one day. You just buy and hold this for the long run because over time, on average, this returns 8% plus a year. So it's not get rich quick. The goal is to build and preserve. So you turn $100 into 108, and then it compounds 108 into 120, then 120 into 150, and it kind of snowballs up. So anyway, let's see. We'll look at a couple more here. Oh yeah, Microsoft. I wanted to get to them. So yeah, Microsoft, obviously we've all heard of them before. Like AI toolkit of the future. You just buy and never sell Microsoft. We can see their premium subscribers are 82 mil from their Office 365 products. That's what this is right here. If you heard of OneDrive, Office, all that. Microsoft owns that in the software, high margin software, basically. And look at their annual revenue here. It's insane. It's 120 billion of annual revenue, and that's just one business. They're also huge in the cloud play. They have their intelligent cloud business, and this one is also booming at a new record. It's up 25% year over year after growing 163. That's crazy. So yeah. And if we go to the net income, they have according to S&P Global and Moody's, it's safer to invest in Microsoft than it is to invest in treasury bonds, U.S. government treasury bonds. So they have a better credit rating. Yeah, they make basically 25 plus billion of after-tax net income a quarter. It's pretty insane. Pretty insane. Petror said, what brokerage do you use? Yeah, hey, if you want to get this brokerage I'm on, it's where you buy stocks. It's in the link tree in my bio, the very first link there. So yeah, it's where I like to keep my idle cash. If you look in the middle of my screen, I got $1,000 of cash. Earns me the daily interest, which is pretty cool. It's kind of tough to buy a lot of stuff at all-time highs, so that's why I have cash right now. I want to buy more of these. I'm actually about to buy more Amazon for sure. Amazon's a valuation I can pay right now, but I'd love to buy more Comfort Systems and Amphenol, but the valuations are too nutty. All right, so yeah, hey, good point. Get rich slowly. Exactly. So Eli Lilly, if you have the intention to get rich slowly, that's when you kind of get rich quick. And if you have the intention to get rich quick, that's when you lose your farm. You try something risky like 0-day expiration call options or micro cap. Anyway, here's Eli Lilly. This is a stock I'd recommend to buy and never sell. You're just looking for a stock to buy and never sell. Consider it as a couple percent of their portfolio, and you could probably get good results, not financial advice. What does this company do? If you need exposure to healthcare, this company sells a bunch of different prescriptions. This is the company that's kind of given Novo Nordisk a run for their money with their new Zepbound product. Zepbound is now 18% of the company. This product didn't exist 2 years ago. This is a weight loss prescription, direct competitor to Ozempic, and look at the growth here. It was 175 million just a year ago. Now it's 2.3 billion, a 4x year-over-year increase. That's insane. And not just them, also their largest product, Mounjaro. Check this out. This is ridiculous. This is what's so cool. Eli Lilly created this one in 2022 with 16 million of sales, and look at them ever since. Just hits a record every year, every quarter, up 112% after growing 200%, after growing 6,000. That's just crazy. And they own a bunch of other ones as well, like Taltz. What's that? It's up 26% after growing 15, after growing 8. So they just own a bunch of different prescriptions, and they're extremely profitable too. Revenue's up 37, and profits are up 61. That's insane. You get almost 1% dividend with them too. Hey, what up, JSSO? We said, what's your thoughts on Intel? Hey, let's do it. So Intel, they have... First off, I wouldn't even be talking about the stock if the government and NVIDIA didn't take a stake into this company, because they needed to be saved. Without the government stake and without NVIDIA taking a stake in SoftBank, we wouldn't even be talking about Intel right now. So basically, Intel just got bailed out. That's great news, because if we look at the right now fundamentals, it's not great. NVIDIA is going to move some of their older series manufacturing to Intel from Taiwan. Yeah, we can see their PC GPU market share. They have a 63% market share that's slowly going down every year. The right now fundamentals are terrible. They burned through money. They lost $3 billion, $1 billion, $17 billion. The free cash flow is just as bad, losing a couple bill of free cash flow a quarter. So honestly, but that changes everything. The fact that NVIDIA and the government took a stake. We're really trying to be more manufacturing independent, because if you didn't know, NVIDIA, they just design their chips. NVIDIA just designs them. Taiwan Semiconductor in Taiwan makes all of NVIDIA's chips. And that's not good, because they're 6 feet away from China. We need to be a bit more independent if we have to be, especially if we're poking everyone on a stick with tariffs. So that's why the government took a stake in Intel, and I think the government pressured NVIDIA to do it as well, and they're going to move some of their manufacturing. So anyway, that's kind of cool. Good news about that. I don't know about its right now price, but hopefully that was helpful there. Can you explain some of the leveraged ETNs like GDXU do not outperform over the long run? Can you explain why some of the ETFs don't outperform over the long run? Sure, I can try. Let's see. Why does this stock not outperform in the long run? Well, this is the 3X leveraged ETN, exchange traded notes. So they're doing some sort of income thing, or I don't know. So this one, it's a gold ETF, so it's really following the price of gold right now. The actual commodity of gold historically never outperforms the S&P 500 in the long run. It's done very, very well the past 2 years. I don't know if you wish I'd give you more thoughts on that ETF right there. It looks like they just own the Van Eck Bitcoin miners or something. So yeah, anyway, I'm going to go. I'm going to be live probably in a couple hours. If y'all wanted to follow up on, we stream every day. We'll be doing another one probably tonight. We're going to be doing 2 streams tomorrow as well. So anyway, have a great rest of your day. Have a great Saturday. See you very soon. Oh yeah, and if you want to get this app I'm on, the brokerage is my favorite one. Affiliate link. It's in the link tree in my bio, the very first link there. If you sign up and deposit $100 on that brokerage, we'll both get like some free stocks. Anyway, have a great rest of your day. See you very soon. And thanks to everyone on the YouTube stream. See you, JSSO. See you, Looney. Hope you have a great rest of your Saturday. See ya. Let's see. Is Charles in here? See